We've touched on this a little bit earlier, the survey that Cityscape and YouGov did ahead of this conference, and the findings have been released over the past 12 to 24 hours or so. You've had one or two snippets, but now you get a little bit more detail. Please join me in welcoming our next presentation. It is the Investor Sentiment exclusive presentation. The title is this: Understanding the Investor Mindset, Building Spaces with Your Future Investor in Mind. And to present these findings, please join me in welcoming Managing Director at YouGov, Kailash Nagdev. Kailash, nice to see you.
Thank you. So I'm the first person who gets the pleasure to say the lunch is on its way. As the countdown for the lunch begins, I would present to you quite a few data-heavy slides. So please bear with me, and we'll try and go at a pace so that we don't delay your lunch any further. So good afternoon. Thank you for giving me the opportunity to present to Cityscape, for giving us the opportunity to do research on their database and our panel. So when you think about the research and you think about this presentation, don't think about YouGov presenting you. Think about us as 1,240 investors in real estate standing in front of you and asking you, hey, this is what we want from a real estate investment. So what are their sentiments? What are their attitude towards real estate that drives the real estate investment in the sector? So I get asked this question quite a lot on who have we exactly spoken to, who are the investors that we are talking about. So we have spoken to all the GCC residents, and this presentation focuses only on the GCC residents per se. So who have we spoken to? So we have spoken to pretty much all the income groups. So you see those earning 15,000 dirhams or less a month. We cover about 25% of the sample, so that gives you low income segment. You get mid-income segment from about 15,000 to about 30,000 odd dirhams monthly household income. So you get a good coverage of mid-income segment, about 40% of the sample, and then about 30,000 dirhams a month. That covers about 30% of the sample. So it's a good spread between low-income investors to high-income investors. You've got break of nationalities, you've got country of nationalities. Now, one thing you'll notice is large amount of sample is coming from UAE and Saudi Arabia. So when we go through the presentation, if there's something very interesting about UAE, we'll bring it forth. If there's something interesting about Saudi, we'll bring it forth. For other GCC, because the sample is smaller, I'll keep it as is, but some fascinating results. So here we go. So this is the headline finding that been used in the conference before. Where are people looking to invest? So we asked them the question saying, hey, if the whole world was open for real estate investment, which are the countries that you would most likely invest in? And not surprisingly, GCC, because it's a GCC resident survey, comes out to be the top. Interestingly, if I go back to my previous slide, you see Asian expats who are resident in the GCC had about 50% of the sample. But when they look to invest, only 19% are investing back in their home country. That means a lot of the Asian investors are investing here. So that's a fantastic piece. They're not investing in the home country, they're investing in the country of residence. Then we further asked, saying, within the GCC, where would you invest? Not surprisingly, UAE comes out to be at the top. About 63% of the respondents said UAE is their top destination to invest. Slightly down from 2016, from 68 to 63, but within the margin of error. Egypt has gone up because of the opportunities that the market is affording. Saudi Arabia, again, has gone up because of the marketing opportunities that exist because of the low prices. Then we asked, within UAE or within MENA, which city is your topmost city? Again, not very surprisingly, Dubai has the strongest real estate investment brand, and actually it goes up to 69%. Interestingly, if you look at previous, the total number of investors in UAE went down, but total number of investors in Dubai goes up because the number of investors who are looking to invest in Abu Dhabi has come down slightly. So that gives you an interesting perspective of how strong Dubai brand actually is when it comes to real estate investment. When we come towards the end of the presentation, I'll bring forth some more brand-related data, because this is something investors quite a bit talk about, saying when they're looking to invest in a particular city, they're also looking at brands that are available to invest in the city, whether it's EMA, whether it's Nakheel, whether it's to buy properties. So which brand is the strongest? So we'll bring some of the brand data from some other studies in it. How much are they looking to invest? So I'll disregard the left side. Let's go to the right side part. So if you look at the investment ticket size, less than 200,000, which is about 730,000 odd dirhams, about 27% of residents are saying, this is my investment ticket size, do you have something for me? About 200,000 to $500,000, which is just shy of 2 million dirhams, about 42%. If I add these two percentages up, it's about 70% of investors are looking to invest less than 2 million dirhams into the property market. Now, Dubai, with its supply, has these properties which are sub 2 million, but investors are also putting a lot of other demands within this mix. And as we go through, you'll see how much demand are they actually putting on the real estate developers, i.e. yourself. 17% basically go up to 4 million, 3.6 million, and then 7%, and so on and so forth. So just remember this investment ticket size, 40, 69% or 70% below 2 million. Just remember this number as we go through. What are their major concerns when they're looking to put their money into the real estate? What are the major concerns? So we go from macro economy to micro. So let's look at macroeconomic factors. So when you look at macroeconomic factors, state of local economy, given the oil price scenario, given everything else that is going on, that concern has gone up. If you go further down this list, there's state of global economy, and as Anita mentioned in her previous presentation, the state of global economy is actually looking healthy. And if you look at 2016, about 13% of people said this is one of the major concerns. It has actually come down. So economy is still a major concern, but actually the concerns are kind of playing out in a different way as compared to last year. In last year's presentation, we had one of the highest numbers as the oil prices, because it was a hot topic. Investors really didn't know where it is going, but that concern has now kind of more or less subsided, because we know where the oil prices are going. It is flattened. It's not as volatile as it was last year. So even though it was one of the highest concerns, it doesn't feature in the list now. One of the other things, we heard the first presentation from His Excellency Marwan on the investment loss. Again, if you look at the investment loss, the last bar chart, it's actually come down. It was 10% last year, it is 9% this year. So apart from the state of the economy, where investors feel a bit uncertain, the macroeconomic scenario is not that bad, oil prices stabilizing, and so on. So then we asked them, okay, if you were to invest, where do you think the sales price for residential properties would go? So let's start with UAE. Last year, about 47% of people said it will decline. This year, about half the respondents said it will decline. But an interesting number is just below that, and we'll go into detail on the next slide. The decline is not that high. It's only about 3%. So they're not expecting a massive correction in the sales prices. They're saying more or less it is stable. It might go down, but not go down by all that much. Whereas compare it to Saudi Arabia, you get almost 7 out of 10 respondents saying it will go down, and the quantum of decline is quite high as well. It's about 10% on average. They're saying the sales price would decline. That goes back to the previous slide saying, if you were to invest, where would you invest? I would invest in a market that's almost at the bottom. So you'll invest in UAE, but you'll also look at Saudi in terms of where the real opportunities are. So here's the quantum. So we actually break it down by quantum. On the left-hand side, you'll see the sales. On the right-hand side, you'll see the rental. So in terms of sales, about 24% people say it will go up. That's countered by almost 60% of people saying the sales prices would go down, and the average across the GCC is about 6%. Rental is far more extreme than that. So instead of 57, about 61% people say the rental prices would actually come down. And if I actually quantify it, in Saudi Arabia last year, about 35% of respondents said rental prices will go down. This has now almost doubled. So almost 70% of respondents are telling us that the rental prices in Saudi will go down by a quantum of about 11%. Again, you'll see the same story in UAE, but the numbers are not as high. It's basically a correction of about 3.5%. And in the other GCC, I wouldn't go into much. So These are the macro factors. When it comes to micro, saying, okay, fine, these are the major economy factors. If you were to invest, what would you mostly like? So you get 2-bedroom apartments as the number one choice. 23% of the respondents want a 2-bedroom apartment, followed by a 3-bedroom apartment at about 19%, and then a 4-bedroom villa at about 20%. So if you add this up, from 2-bedroom to about a 4-bedroom villa is most of your demand. Now tie it back to how much investment ticket size they had. So the challenge with the investors is they're now looking to buy something in the range of 2 million dirhams or little less, and they want either a 2-bedroom apartment or a 4-bedroom villa. The demand doesn't stop there because it still continues. Where do you want to buy? Most of them want to buy in a downtown area. So if I'm buying an apartment, whether it is the boulevard, whether it is Business Bay, those are the areas I want to buy because those are the standalone residential properties in a city center area. Or in terms of villa, where do they want to buy? They wanted to buy outside the city limits a bit, but within a gated community where there are all the amenities. Let's go a bit further. What else do you want in a house? What we want is the good quality of housing, 87%, 88% value for money, ties back to the investment, and ease of access. Wherever there is ease of access and I don't have to drive 20 minutes within the community, that's what I really want. Let's go further. What else do you want within the community? So almost 41% people want an education facility, 40% want a healthcare, 33% want supermarkets, grocery stores, and 32% want it to be closer to the work. Now, put all of this together. So my investment size is less than 2 million. I want a 2-bedroom apartment or a 3-bedroom apartment or a 4-bedroom villa. And I want it in the downtown city center area, and I want it in a gated community, either of the two. And my investment size is less than 2 million. What you get, affordable units are lacking in the market. They're not. They're absolutely not. If you look at Dubai as a market, they're not lack of affordable units, but when you combine it with the investor demand, that's the biggest gap that comes out in the market. Access to reliable brokers, year on year, we have seen this, the reliance on brokers or reliance on kind of trusted brokers always being mentioned as one of the biggest gaps in the market. We saw some good technology. I'd really love to see the virtual augmented reality where you can look at the buildings, but comparing data from one project to the other seems to be another one. And the last one is actually the first time we have actually seen the demand for energy efficient properties, probably because of the fuel prices or what is going on, but energy efficient homes are something that are coming up. Probably we should put the well-being thing into this as well and see whether well-being kind of comes up as one of the factors. We had a whole presentation on Expo 2020. We asked only the UAE residents, not the whole GCC residents, what do you think the impact of Expo would be? So it's a very, very encouraging figure because most of the other times we've done this survey, we always get a fear of what will happen post-Expo. So some of those, Marjan very efficiently explained what is going to happen. But not only the investors are saying the investors' appetite would go up, the supply would go up, and also the affordable unit. So if I'm an investor today, I'm looking to invest, not to stay, but to invest, one of my prime areas has to be near Expo 2020 side because you've got all the factors going for it. You'll have the infrastructure, you'll have the affordable housing, and you'll have one of the largest world events happening in less than 2.5 years of time, or a little over 3 years. So the factors are all there for Expo to support. There's one stat that I was looking at when I was trying to get Expo 2020 is if you look at East London on what happened post-Olympics, the East London area, the capital appreciation within 8 years of pre and then post-Olympics has gone up about 49% increase in the capital appreciation of the properties in East London. You compare it to the rest of the UK has grown by about 29%. So you had 40% increase, 49% compared to 29. Even if you look at general London, Greater London area, the average is about 30-odd%. So Olympics definitely had an impact, and there's no doubt Expo 2020 would have a similar impact on the wider Dubai economy, but specifically on that sub-economy around Al Maktoum. I told you I was going to present some data on brand. This is the study we do every single day that goes out. We track about 500 brands in the UAE. I picked up the real estate sector. In the real estate sector, who are the strongest real estate developer brands in the market? So this is the data with about 2,400 respondents in the first half of 2017. What do you see? Emaar being the best and the healthiest brand in the UAE. It's not only the healthiest brand, but it's the healthiest brand by a margin. So if you look at the score with Damac, who is number 2, the difference between them is quite big. But then the rest 4 brands also are not without surprise. You have Damac, you have Nakheel, you have Dubai Properties, and finally you get to Danube. Danube Properties was not even in top 10 last year, but it has come out to be one of the top 5 brands in the UAE for 2017, first half of 2017, which is fantastic to see a new brand coming up relatively young as compared to some of its peers. I'm going to explain a bit of this healthy brand. So we looked at Buzz score. So Buzz is basically, have you heard anything positive about this brand? So again, the top 5 remain the same. They don't change. We have 30 developers. Out of it, these 5 are again not amongst the top 5. But now you'll see Danube going up to number 4. The reason why Danube is so positive in the market is because it is coming out with the products which are below 2 million in the prime downtown areas or in the Furjan community. That is what investors are looking for. And Danube, with its investment plans, is actually able to meet some of his demand. So some of the positivity that you see is because of the new launches. But they're also very heavy media spenders. So if you look at the ad awareness of these brands, again, Emaar, with all its launches come out, this time the gap with Damac is far less because we've all kind of been in the city. We see a lot of advertisement done by Damac. Now Danube moves to number 3 out of number 4 because they have investing heavily in creating that brand. And again, the top 5 with Nakheel and DP Dubai Properties kind of top of the 5. Which brand presents good quality? That's the question that we asked. And again, the top 5 remain the same, but you see more established brands such as Nakheel and Dubai Properties kind of coming back to the front of the rankings. Which brand offers good value for money? Again, Emaar is number 1. So Emaar kind of tops the chart pretty much all the way through. Damac at number 2 all the way through, and then Nakheel, Dubai Properties kind of, and Danube kind of round out the number 3. So it doesn't necessarily mean that you have to be cheap for having good value for money. It's the quality that what you pay for. I'll skip this slide, and that's about my presentation. Thank you so much.